This introductory video guide will give you a clear understanding of the benefits which this plan offers and the things you have to do to get these benefits. Let's first start off with the free look period. To ensure that you are comfortable with this product, we provide you with a 15-day period from the time you receive the policy document to understand the policy. If you find that there are some aspects of the policy that you are not comfortable with, you can return the policy and you will be eligible for a refund. Now let's start with a guided tour of ICICI Pru Easy Retirement. There are two phases to this plan. The accumulation phase, where you pay premiums towards this plan, and the income phase, which is when you start receiving regular income from this plan. Now let's take a closer look at the accumulation phase. In this phase, you can pay premiums for 5 or 10 years and even choose to pay premiums every year till the time you want your income phase to begin. You can choose between two funds, Balanced Fund and Secure Fund, in which your premiums can be invested. You can also choose any combination of these two funds to invest in. In order to increase your accumulated savings, two features can help you. The first is a top-up. Apart from your regular premium, whenever you have some extra money, you can invest that to top up your savings. You can top up your savings as many times as you want, with the minimum top-up amount being 2,000 rupees. Now let's understand pension boosters. At regular intervals, we will provide pension boosters to help increase the value of your accumulated savings. Pension boosters will be provided to those customers who have paid premiums for at least 5 years. An insurance plan is meant to protect you and your family from unforeseen events like death of the main income earner in the family. In this plan, if the person whose life is covered by this policy dies during the accumulation phase, we will pay an insurance amount to the family members. We will assist your family members through a hassle-free claims settlement process in getting the amount due to them. At the end of the accumulation phase, the premiums you have paid along with top-ups and the pension boosters will add up to form your accumulated savings. Do note that your accumulated savings will be at least 101% of the sum of all premiums paid and any top-ups you may have done, which means that regardless of how your investment performs, your capital is protected. A key point to note is that you will be able to access your accumulated savings partially or fully only after the 5th year. And now let us understand the income phase. In this phase, your accumulated savings would provide you with regular income for life. You can choose to withdraw up to 1/3 of your accumulated savings as a lump sum and use the balance 2/3 to get regular income through appropriate products from ICICI Prudential, the details of which are mentioned in your policy document. There are quite a few options that you can choose from for how you want your income. For example, one option is where you will get a regular income for as long as you live. So whether you live up to 80 or 100 or 120 years, you will get an assured income from us. Another option is one which you will get a certain income for as long as you live. After you, the income will be given to your spouse for as long as your spouse lives. And there are more such options for you to choose from. We will send you a letter 2 to 3 months prior to your income phase starting, asking you to choose amongst these options. Once you inform us about your choice, your income will start being paid out to you on the due date. Let us take a look at an example to illustrate the benefits of this plan. Let us take the case of a 35-year-old healthy male who wants to retire at the age of 65 and is looking for regular income starting at that age. He has chosen to pay an annual premium of 1 lakh rupees for a period of 10 years and has chosen the Balanced Fund to invest the money in. If we assume conservatively that this fund grows at 4% per annum, he can expect an annual income of close to 1.27 lakh rupees starting from the age of 65. This will be given every year for the rest of his life as long as he lives. Now, if we assume that the fund grows at 8% per annum instead of 4%, the expected annual income will be close to 5 lakh rupees to be paid every year for the rest of his life, regardless of whether he lives up to 80 or 100 or 120 or longer. Do note that the returns shown here are not guaranteed, and the actual values will depend on future returns earned by the fund, and the actual income payout will depend on the annuity rates prevailing at the time the income phase begins. But once the income phase begins, your regular income is fixed and guaranteed. So, to summarize, here is a brief synopsis of ICICI Pru Easy Retirement. This plan has an accumulation phase and an income phase. In the accumulation phase, you need to pay your premiums regularly. You can pay for 5 or 10 years, or for every year till the time your income phase begins. Top-ups and pension boosters help increase your accumulated savings. Your accumulated savings will be at least 101% of all the premiums you have paid. In the income phase, your accumulated savings will be used to provide you a regular income. There are different ways in which the income can come to you. We will write to you about 2 to 3 months before your income phase begins, asking you for your choice. Your regular income starts as soon as the income phase begins. Pay all premiums to ensure that you get the benefits of this policy. We welcome you to the ICICI Prudential family and look forward to serving you for a long time.